Are you guys wondering what's happening with the interest rates in this market? Well, John Jones is our regional vice president, and he's our guest today. And he's going to go over a little bit of what's going on, what the projection is, where we're going.
Well,
John,
thank you for that lead-in, Cindy.
Sure.
And I'm super excited to be on this show.
we're happy to
You
have
guys
you.
have been doing this for almost a year, and you finally had somebody cancel and got me last minute to jump in and talk
stop.
about
No, you
this
were
awesome,
first here.
this awesome, exciting topic on interest rates, right?
Yeah.
It's funny because we started the year and rates were at 3%, right? We walked into January of 22, all humming along in our industry. Real estate was hopping, and what happened?
Life was good.
We're here at the beginning of November. 10 months later, rates had more than doubled.
Yeah.
So crazy thing is, I, like many of you, have been doing this a long time. And so for the heck of it, a week ago, I looked back and I wanted to see how quickly rates have risen or fallen over the last 40 years, from year over year. So interestingly, the most rates have ever gone up or down, whether they were 12% or 2%, was just over 1% from the start of the year to the end of the year.
Wow.
So think about that for a minute. I mean, we went up over 4 points.
In less than
That's
a year.
quadruple more than any other year in 40 years. So
Less
do you
than a
think
year.
do you think the consumer, do you think all of us are feeling inflation? Never
Well,
mind,
we're
it's
not in
inflation.
a recession yet, they're saying.
Not in a recession.
They haven't formally announced it, but
Well,
That's happening.
all right,
But
so-
all the indications show that we are.
Yeah, so we've had two consecutive quarters, Q1 and 2, both negative GDP, which is typically a look back that indicates we had been in a recession. They don't always call it while we're in it, but I think we realize and recognize with where rates have come in our industry, where housing prices have come, go into the grocery store, any item that you look to buy or service that you look to get, we're paying like it's sky high. Is there anything we did a year ago or 2 years ago that's the same cost?
Not that I
it's-
could think of.
No.
nothing.
I mean, it's nuts. So, I mean, we want to talk about where's it going, right?
Right.
When does it stop? So this week and on November 2nd, Jerome Powell, thank you, please stop, right?
Stop the
he
madness.
He is.
Cut it out.
Barry Habib likes to say, "Stop the madness." This guy, our Fed chairman, he's on a mission to end inflation, which is great, but it's at all cost, right? It's not going to be a slow easing here. He's going to continue.
We're gonna feel it before we see it.
Yeah, the message on Tuesday was, I'm going to keep coming with higher rates in the near future until prices level off. We'll give you a quick indication. When we started the year, $300,000 loan at 3%, right? Your payment, and it was $1,064. Your principal and interest was $1,064.
Right.
Today, at 7.5%, that same $300,000 cost you almost $2,100. I mean,
Oh,
it's
that's
substantially.
putting it in,
double.
that's putting it in black and
So
white.
you're looking at about $800, $800 to $900 more for a $300,000 loan, or $10,000 a year, times, we know 30 years, so $300,000 more to borrow that $300,000 in just 1 year. It's insane.
Right, and the average house is what, 458,
Sales
458,000?
prices
The good
have
news
continued
is,
to
though,
go
at some
up.
point, like I think all of us here, right, the indicators are that at some point we're gonna get to where we need to get to, where we balance off, with inflation.
And then,
We're probably gonna continue over the next 3, 4, 5 months to see rates creep up a little bit. The Fed meets again December 14th, I think, for the last time this year, and they're gonna go up at least 50 basis points. They've been, the last 4 times they've met, it's been 75. A lot of people think another 75. So over the next couple of 3, 4, 5 weeks, we're gonna probably see rates on mortgages continue to trickle up.
Tighten your
At
belts,
least,
folks.
yes,
yeah,
at least
8% by the end of the year.
Especially those of
that's
us in
it.
the mortgage industry.
Yeah,
No one has a crystal ball. We
Yeah.
all can do is just watch and forecast. Like, we all know we are in a recession. I'm sorry, you have 2 quarters with a loss.
negative GDP, yep.
Exactly. But then at the end of the day, and I'm not trying to bash the government, but they go in and like to misconstrue the numbers. So that gives consumer confidence. But at the end of the day, we are in a recession. They have to announce it. They said on the message yesterday, we're not done. They're not done raising rates at all. They are not. So we don't have a crystal ball. We can do is analyze statistics, but what's your perspective for the rest
Yes,
of this
because
year and
I
next
prefer
year?
to be a Pollyanna. So what's the good news, John? When are we gonna start seeing this get better? In your, I know you don't have a crystal ball, but what's your
So I
opinion?
think by the end of Q1 in '23, we'll start to see stuff level off, and then hopefully, second, third quarter of '23, that we see stuff coming back, to where it needs to be in balance. And really, the definition of inflation, not recession, is when we want cost of things, items, that basket of goods to go up only 2% a year. It's been going up 7, 8, 9% a year. So when we go 12 months back, as long as we get to March where that gallon of milk doesn't go up by 8% from the previous March, then we're starting to get back in balance. It doesn't have to go back down. If everything where we're at today stays where we're at with a slight increase, that's a huge improvement. But if things continue, we talked about
At a higher rate.
your Diet Coke or your Pepsi, I mean, they're
My Land Shark.
substantially higher from a year ago.
Yeah.
Your Land Shark.
My Land Shark, my beer went
So
up.
I do think we're gonna continue, your consumers are feeling the pinch now, credit card debt is at an all-time high. Our industry is really bearing the brunt of this. Real estate, if you're a home buyer right now, affordability is a huge thing. Most people with incomes, middle-class income can't qualify or find a home.
No.
Even though there's a home there with interest rates where they're at, so.
Rates are gonna start trickling back down.
Yeah.
Sales prices aren't gonna continue increasing the way they have been. And we might see a
Once
slight
the
improvement.
consumer spending slows and stops, lots of theories behind that.
Maybe we
but
won't see
interest rates-
23% and-
Interest rates typically start easing and
Yeah.
coming back down. So, this time a year from now, there are people that think rates will be back at 6. No crystal ball again. We never thought we were gonna go higher than 5.
No.
No.
When we started this year, we knew we were heading towards a recession, and every expert in our industry thought by this time in '22, we were gonna be around 5, 5.25. Everybody, and we were like, wow, 5, 5.25. We were at 3.
Yeah.
That was a huge jump. Now here we are, close to 8.
And we will be 8. I would guarantee you by Thanksgiving, I think we will see rates in the 8, if not, early December.
Yeah, I think so too.
I personally think we're gonna see rates in the 8s. And I survived the 7, 8, 9 mortgage industry.
My first
All of
house,
us did.
8.5%.
Yeah.
We've
But
talked about this.
back
My first house was
then-
18%.
Back then, that crash that we all experienced, was expected, it was subtle, it was hard for a few years. This year was a gut punch.
We didn't expect this.
No, and so
So
fast.
to this degree.
So fast.
Yeah.
It's
Yeah.
just spiraling out of control and there's nothing we can do. I know myself personally, I'm not spending as much money as I used to. I'm eating in, I'm staying
Same.
in, driving less.
The
And I'm gonna
Amazon
continue to
driver
do
does not
this.
know me as well.
Yeah, they're not throwing packages at my door
No.
anymore.
We had a
so-
slight uptick in
We
unemployment
all are
today,
gonna
so, yeah.
are going through this, so we are
Yeah.
all in this together.
I hope everyone does that. I hope everyone if they slow down their spending now, I know Christmas is coming, so what? Or the holidays, I
Pull
should
back a
say.
little bit.
Do you need it?
It's
Do you
all
really
about
need it?
family.
Yeah, but if you stop the consumer craziness now, then rates are gonna go down faster next year. That's just me being selfish,
Yeah.
but.
I mean, homeowners out there, if you have a home right now, don't panic. This isn't 2008. We're
No,
not gonna go through a
no.
crash where
Nobody's gonna
No,
do
we're
it. We
still-
still increased 23% year over year in home appreciation this year.
Yeah, and we need to.
And level
look,
is 7%.
And that's
We-
part of the inflation problem. Look, I looked in my neighborhood, we've got a few homes for sale, 4 years or less, and each one of those homes wants over 100% what they paid for it in less than 4 years. That's over 25% a year. It's not sustainable.
No.
Right,
No.
none of us need that.
We
But it's
don't.
not
We
gonna
don't.
drop though
Any
either.
normal home sellers, homeowners, please, in a normal market, you want 3 to 5% home
Yes.
appreciation a year.
You're still
And you'd be
appreciating.
super happy after 10 years with that appreciation. You don't need to get 50% more after 2 years,
Yeah,
Right.
right? I mean, there's a runaway train and it's just gonna hit a
It's
wall.
gonna
It's
slow
gotta
down.
level down, it's gotta stop.
it's gonna
So
level out, but it's not gonna drop.
I do think,
Yeah.
it's gonna make a turn here by midsummer of '23, if you're looking to get into the game.
Mm-hmm.
Beyond that, we don't know.
We have no crystal ball, but if you have
And
any
again,
questions for us.
Jerome Powell, I'm putting that out there directly to you, looking at you, help us out, we're all feeling it here. Real estate is the driver of our economy, and we need stuff to start churning again, you know, folks like us that own homes, a lot of people wanna move right now and they feel like they can't.
Right.
I mean, that's the other thing that concerns me, right? Who's gonna make a move when their rate's 3, 2, all the refinances we did in the 2s? Somebody that does wanna move, downsize, you know, we heard somebody earlier talk about that. I wanna downsize, but I have a 2.5% rate. If I cut my mortgage in half at 7.5, my payment doesn't move, it's the same. I've got
You
half
haven't
the house.
downsized, yeah, you haven't
You know, so
downsized,
it's
yeah.
gonna cause people to feel like they're stuck in
So
a good
you're
way, you know,
still
good
not
way,
gonna
good
see any more
payment, but
inventory
you're not
added.
gonna see, you're not gonna see movement until rates do trickle down and people can jock you
So-
around again.
Just
Yeah.
buckle up for about 6 months and,
Yeah, we'll get through this.
It's gonna get better.
Yep,
Yeah.
we'll get through this.
So if you have any questions, feel free to give any one of us a call. And you can watch us on our YouTube channel at Mortgage Chicks with Hot Tips.
And follow us on Facebook at Mortgage Chicks with Hot Tips.
If you have any questions or ideas for future podcasts, please send us an email at mortgagechicks@vandykemortgage.com.